TIP, the ETF which tracks Treasury inflation protected securities, is appearing on our scanner for the bearish side. Now, I think it's easy to just chalk it up as noise, but I don't think it's noise. In fact, I think TIP appearing here is part of a broader macro signal and one that you can take advantage of. In this video, we'll walk through the entire process and end the conversation with two different REITs, ABR and Agency, both of which I think are setting up for some nice opportunities, all of which stem from TIP and what this signal appearing on our bearish scanner really means. Now let's start the conversation first with TIP. When TIP sells off, it's usually about one of two things. One is either falling inflation expectations, or two is rising yields. Now, if we come in to a chart of the 10-year, this is the TNX chart, we can see what the 10-year is currently doing. In fact, we're near, if we take a look where we're near, our April 10th highs at that 4.40% mark. So if we continue to see yields break above 4.40% on the 10-year, TIP continuing to keep falling down lower, then that's confirming that the market sees that the Fed will continue to maintain rates where they're currently at and really is pricing in the rates to remain elevated instead of a rate cut. Now, if we do see these rising yields, then that should put direct pressure on our mortgage-backed securities. Two of them include ABR and Agency. Now, for both of these REITs, I've loaded in the Dividend Pro indicator down here below. This is the Dividend Yield Pro indicator, and for all Volatility Box members, this is included for free with your membership, and I think it's particularly useful right now, especially when you'd like to see some context. Let me show you what I mean. I'm going to load in a 20-year chart of both of these tickers, Agency and ABR. Now, currently, Agency, with the sell side pressure that we're seeing, we can see that the dividend yield inside of Agency has now tapped 17.73%. That seems high, and it is high, but in the context of where it has been, take a look at where it can go. It can go up to about 21%. If we take a look at what our DDM, this is our dividend discount model calculation, tells us, that gives us a fair value near $9.60 based off of the original required rate of return that we had, which might now even be higher with the additional risk that you're having to take. So this $9.60, which was based off of, I believe it was a 15% required rate of return, we're already beating that right now, currently at $8.12, and we're looking for additional sell side pressure here to make this even juicier than the 17.73%. If we compare this to ABR, very similar idea here, but I think ABR has a little bit more to the downside. One thing I like about ABR is if you take a look at the dividends, they've continued to increase them over time. Now you take a look at the yield. Current yield is 16.48%, but where it has been, close to nearly 25% on the yield. So I think ABR, in terms of how much greedier can you get for that dividend yield, well, clearly history tells us a lot greedier than what you're currently at. Now, if we zoom out and take a look at what our DDM valuation tells us, that's a fair value price of $11.47. And again, we're underneath that. And I'm looking for this continued sell side pressure, all stemming from this TIP ETF and monitoring this 10-year to see if our yields continue to keep rising, using both of those as a combination to take advantage of the volatility inside of Agency and ABR. Now we come into the options chain, and Agency here looks a little bit more interesting, mostly because we have that 65% IV percentile compared to inside of ABR, we're at just 59%. And I say just in quotation marks, mostly because right now what we're essentially seeing is elevated volatility in both of these markets, ABR and Agency. Both are at the IV percentile above the 50% mark. Both have options that we can take advantage of. And inside of Agency, if you can take advantage of this $7 strike but get a little bit more premium for it, I think that would be a really nice entry. $7 here is a place I wouldn't mind building up a position. So there you have it. If we were to recap one more time where this conversation started, We started with TIP appearing on our scanner. This is the Treasury Inflation Protected Security ETF. It's a BlackRock ETF, but TIP appearing on the bearish side suggests that we, or the market rather, is expecting inflation expectations to decrease, yields to continue to stay elevated, and for the Fed to maintain their current rate pressure. If that is the case, then we would expect that to see translated into mortgage-backed REITs. We looked at 2, agency ABR. There's a lot more. You can repeat the same exercise with the dividend yield pro indicator to get an idea of what are some fair value prices, where are you beating that fair value price, and what is the dividend yield that you're content with, that you're happy with at starting to use this volatility to build a position into. Take care, everyone. Good luck trading, and I'll see you in our next update.